Vista Equity Partners, head of equity capital markets, back with me at Post 9. It's been a minute. It's nice to see you again.
Yeah, great to see you too.
So if software is like everything when it comes to this whole AI story, why the lagging of the market this year? What's going on?
Look, I think 2025 was definitely the year of predictable volatility we talked about, and we wanted to see proof points of software really taking on AI and becoming that AI adopter that we've talked about. And the reality is we're seeing green shoots. We've seen some great software stocks, but it's still early days. So if you think about the AI adoption cycle that we've talked about, it's going to happen in waves. And we've seen the economic rent attribute to a handful of stocks for most of 2025. That is like the hardware and semi space, as well as the hyperscalers. It's now setting up for wave 3, which is the application layer, the software layer. And that's where I think you'll start seeing valuations slowly start to attribute as proof points come out.
Do you think the jury is still out, or the market is still trying to assess what the impact of AI is going to be on SaaS?
I think that the people are trying to understand how SaaS model pivots to an agentic AI model and who is going to be the early adopters of that and what proof points we need to see. I think that 2026 is going to bring about some like KPIs and some real metrics for people to establish the AI adoption layer you're seeing. I mean, corporate America is looking for an embedded, established software player to adopt AI and make real efficiency changes within their organization, and that is going to start happening. You're seeing that happen with some software companies.
It feels like it's really bifurcated, right? You have some software stocks, as you said, have done really incredibly well. The 10% gain for the group itself doesn't necessarily represent some of the big names within that space that have done terribly.
You're right. I think that software is going to continue sort of going along a path where it's going to get bifurcated into either the software solution that the software company is providing to its customers becomes agentified. So that's something like you see Salesforce wanting to change its name to Agentforce. And then you're going to see software companies that the core proposition they offer to their customers doesn't need to be agentified, but they use AI or agents to agentify how they deliver that value proposition. And you're going to see that bifurcation, and that, I think, is where you're seeing the value dispersion.
How does the AI trade in general look to you today, heading into this new year?
I think it's a really exciting time. I think 2026 is setting up for a great market for deal-making activity and for funding all of these sort of AI adoptions that we are all kind of knowing are going to come but haven't yet materialized.
Rate cuts plays into that story. Is that what you're thinking?
I mean, a rate cut, a Fed easing environment definitely helps propel a lot of the valuation methodologies that we're looking at these AI companies for, but also lowers the cost of capital. And it facilitates companies to really take on this innovation, this technology, and to bring it to their customers.
You don't have any doubts about what the path ahead for the Fed is and how that impacts your outlook? I mean, the conversation I had with the group that was up here before you came up, it's like, well, and even with Steve Leisman's Fed survey, it's like, okay, maybe the Fed's not going to be as friendly as we once expected it to be.
I think that any indication of Fed easing, so if tomorrow they do cut rates, I think anything goes a very long way as it pertains to the AI trade and the ability for software companies to become AI adopters. Software will ultimately be the beneficiary of AI, and it's really a time function of how much does it cost to implement that, and the lower the cost of capital, the better. So any wiggle room, I think, is positive for software.
AI IPOs in 2026, what's it going to look like?
I think it's 2026 is setting up to be a really robust market for IPOs and for IPO related to AI specifically. If you think about what you need for a good IPO market, first and foremost, you need investors willing to deploy capital, which we've seen. You need corporations willing to go public, and I mean, you tell me.
Well, that's kind of the wild card, right? You have more companies staying private for longer than they really ever have.
This is true, but then you also most recently have a lot of rumors. I mean, I feel like every week I wake up to a new rumor mill about a company planning to go public. If you look at filings with the SEC, they're up 50% year over year. You go talk to the broader corporations, and they are looking for sources of capital. And the public markets, given the ability for some stability in the market that we've seen in the back half of this year, I think really bodes well for IPOs.